Welcome to the Fear and Greed Afternoon Report for Wednesday the 9th of March 2022. I'm Sean Aylmer. Every afternoon we bring you the 5 news items that you need to know about today. Story number 1, it's all about financial markets. Surging commodity prices threaten to send inflation much higher, with energy and fuel costs set to spike. Also, the floods along the East Coast will likely send fruit and vegetable costs up. Inflation and slower economic growth is now highly likely. That's what we found out from the Reserve Bank Governor Philip Lowe today. With that backdrop, the equity market actually did pretty well, finishing up 1% today to 7,053 points. Telstra led the way among the large caps, up more than 3%, while Commonwealth Bank and National Australia Bank both finished nearly 2% higher. Aristocrat Leisure jumped 4% after saying it hadn't been materially affected by the war in Ukraine. Aristocrat has 1,000 workers in that country. The gold stocks also did well on the back of gold pushing beyond $2,050 an ounce, close to a record high. Tech stocks generally outperformed, led by WiseTech Global, which finished 6% higher. Biotech Mesoblast was the best performer, though, up 16.5%, and the worst performer was Nickel Mines. And that's story number 2. Nickel Mines' share price tumbled 23% this morning, triggering a pause in share trading after one of its biggest shareholders, a Chinese-based business, lost out on the booming nickel price. According to Bloomberg, the shareholder shorted nickel, as in took a bet against nickel prices rising, and then watched the price of the commodity spike nearly 250%. Wow, that's how you can lose a lot of money. In fact, trading in nickel was suspended by the London Metals Exchange this morning due to the extreme volatility in the commodity. Eventually, Nickel Mines came out and said the shareholder wasn't going to sell out. It started trading again. Other shareholders became more interested, and by the end of the day, it was down less than 5%. Story number 3 is about the floods. Prime Minister Scott Morrison declared the New South Wales flood crisis a national emergency, which will free up more help from the Defence Force and financial assistance payments. Officially, Sydney has had its wettest start to the year ever, with almost a year's worth of rain in 10 weeks. Almost half of that has fallen in the past week. Floodwaters peaked today, and with little rain expected in the next couple of days, waters should recede, fingers crossed. There are no other major rainfall events expected in the foreseeable future. Flood victims in Queensland and New South Wales have so far submitted 108,000 claims worth $1.5 billion. Insurers estimate the total cost of the flood crisis will be around $3 billion. Story number 4, according to S&P Global Ratings, state debt levels will reach 23% of GDP by the end of the year. It reflects all the economic support packages rolled out by the states over the past couple of years. Also, there's plenty of refinancing of ongoing infrastructure projects. Victoria is the standout, with gross debt quadrupling between 2019 and 2025. Western Australia's debt isn't growing, thanks to those mining royalties, I suspect. Does it matter? Well, yes, because that debt has to be paid back at some point. Something to worry about in the future. And story number 5, Apple has launched a new version of its budget-priced iPhone that's capable of connecting to 5G wireless networks. The new iPhone SE will sell for $719 in Australia and be available from March 18. Apple's also launched a new high-end desktop computer using its own M1 chips as it pushes to grab a greater share of the PC market. The Mac Studio starts at just under $3,000 Australian dollars. The goal is to push its share of the desktop market, currently at just 2.3%, closer to 17%, which is Apple's share of the smartphone market. That's it for the afternoon report for Wednesday, the 9th of March, 2022. Michael Thompson and I will be back tomorrow morning for the Thursday edition of Fear and Greed. I'm Sean Aylmer. Enjoy your evening.